So, do we go higher in stocks, and what leads the charge? Is it going to continue to be small caps, or will it be the growth names eventually?
I think it's going to be both. I mean, we're still in the bull market. I mean, we're going to get tiny pullbacks. Actually, pullback is 5% decline. We didn't even get that, even in the Russell 2000. The bull market is on. The stimulus is there. The money is there. The liquidity is enormous. And I pointed out that the money supply increase last year was the biggest in U.S. history. And that's going to continue to fuel the market, in my opinion, this year, and the economy.
Well, that's fueling the market. It's also fueling the economy. It's also fueling concerns, Jeremy, about inflation. And of course, we've seen that already crop up on the industrial side, whether you're looking at commodities or whether now, apparently, whether you're looking at some of the consumer staples out there.
Yeah, absolutely. And I've been warning about inflation. I believe we're going to have much more inflation than the Fed is predicting, 4 or 5%, and that may go on for 2 or 3 years. But stocks are real assets. Remember, their claims on capital, their claims on plant, equipment, trademarks, copyrights, intellectual property. These are assets that'll do well in a moderate inflationary environment. I'm worried about bonds. They're going to do the worst, but you know, there's a lot of pricing power of corporations with the demand that has been built up in the assets. So they're going to pass on these increase in costs, and there's going to be increase in costs. There already has been. They can pass those prices on to the consumer.
Okay, Professor, I hear you say bonds are bad, and my ears perk up. How high do yields rise in this environment?
I mean, 2.5%, 3%. I mean, when I think we're going to break the 2% barrier. I know we've had a pretty good bond market the last couple of weeks. It's been since everyone seems to be bearish, you got to be a really crowded trade on the short side. And I think a little bit of news came in that demand was good, and you got a lot of people scurrying. But the trend to me is unmistakably up in yield. We're going to cross 2%, certainly this year, 2.5%. We may get to 3.5% by next year.
Wow, so 3.5 by next year. So don't go into sovereign bonds. Jeremy, what then about credit risk? What then about corporate risk? Is that an area that's going to be a concern for you in terms of quality, or is it an area that you might have to be pushed to go and get some sort of yield?
No, actually, I like credit. I mean, with a booming economy, the risks of default are actually going to be lower. And in fact, I like corporations that have tied up a lot of long-term financing at low rates, because I think they're going to be paying off with depreciated dollars. So they might be the winners in this inflationary cycle that we see. So again, the bondholder, I think, is going to be holding the bag here, not the stockholder, until the Fed has to tighten to get hold of that inflation, and that is far on the horizon, certainly at this point.
When you go back to this idea here, Professor, of the bondholder potentially being the one left holding the bag here, with all of the cash that a lot of these companies have raised, there's been a lot of talk about what they're using the money for, or if they're actually going to put it to some sort of feasible work here. What are you seeing so far right now? I mean, are these companies just basically just saying, okay, we're going to push it back out there and buybacks and dividends, or are they going to do it, reinvest in the business, or just basically use it to pay down debt?
I think all three. I wouldn't say pay down debt. Certainly long-term debt, keep it at these great rates that you got it at. But certainly the other three, increased dividends, some investment, because I think demand is going to be extremely high, and buybacks, are a way to get capital gains at preferred rates rather than taxable dividends. Our crazy tax structure, I think, is one of the reasons we have so much buybacks. But all those three, I think, is going to be pursued with the cash and the profits that they're going to make.